Hello, fellow stock market jobbers who don't just trade stocks, but trade other things. I got to say something. It's like, wow. Did you guys see the action in the oil market today? And I don't get this. I don't understand why, with all the stuff that's going on over there in Israel and the Middle East, I don't know why this is down. I know the Saudis said something about like not having production cuts, which you would think make oil go up. But here, oh wait, actually, let me see over here. Crude prices fall sharply on OPEC plans to restore crude production. Well, that's not what they said on TV today, which is probably why I should stop watching TV. But anyway, see, it says right here production cuts, phasing out cuts. So, anyway, you know what? This is a good learning experience. The really good traders that I've known over the years, they don't listen to the news. The news, the media, they always try to put something on it. It's like, why did oil go down so much today? Well, there were more sellers than buyers, or the sellers were more aggressive. If you try to think about this stuff through the concept of news or whatever, you're never going to get it. If you think about it through the concept of short-term supply and demand, and what do these markets, what do these charts tell us um, about supply and demand and psychology? Well, that's where the money comes from. So I don't see any other story. Crude oil falls to lows after OPEC meeting. So OPEC said they would not cut. At least that's what I saw. So that should be make this go. But anyway, this is good for us. I mean, I paid over $4 a gallon for gas the other day. This will take a few weeks to flow through to the market. But in terms of gas, in terms of the markets though, let's take a look, see what happened today. Pretty quiet. S&P was pretty quiet. Basically unchanged in the aftermarket. The technology sector back to this important 211 level. This just shows you there's certain price levels in markets that are more important than others. And that is such a fundamental rule of trading. It's almost like the most important thing after psychology. I mean, look at this. There's no logical reason why. Well, if we don't think about psychology and we just think about fundamentals, there's no logical reason why this thing should be hanging out around 211. The same price levels it was at 2 months ago. How does it have the same valuation? Interest rates are different, oil prices are different. Well, it's because charts are short-term illustrations of psychology. Put the news out of your mind. Forget it. Put you know, stop trying to figure it out. Just be like, wow, here's resistance. We know that things that get to support or things that get to levels of resistance tend to find support. It happened right here. People sold here. They're like, I made a mistake. If the market gets back to my level, I'm going to buy it back. But anyway, there's really nothing going on too dramatic in anything I've seen as of yet here. All right, here we go. Here's some ideas on the short side. Healthcare is very overextended, and it's at a level that was support before. Support can turn into resistance because you got the people over here that bought, and they've regretted doing so ever since the price went lower. And they're like, if it gets to my level, I am going to sell to get out of break even. All right. So there's a good chance there's going to be some sellers here. And there was. I mean, that's why it stopped there today. It's not a coincidence. All right. Then we have our phenomena of fast move down, fast move up. One of the main reasons, as we've seen, is why you get resistance is because you got remorseful buyers trying to sell on the way up. Just think about it. You buy a stock at 20, it goes to 18, you tell yourself, if it gets back to 20, I'm going to sell it. When you rip through price levels really quick like this, you don't have a lot of time for there to be this big amount of vested interest to form. All right. So there won't be as many sellers here as there typically would in a normal market. So that's why if you rip down, you can rip up. But anyway, I think there's going to be some trading ideas right here in the healthcare sector. This has really got me interested, actually. Really overbought. Now, you might say, look, Mark, I look at the RSI. It's not overbought. All right, let me explain why. Let me get rid of this volume. Well, the RSI measures where we are now to where we were 14 time periods ago. If you count back, 14 time periods ago was like here. But if you look at this big move, if you were to make this RSI set for 3 periods, it would be massively overbought. All right. This is overbought. So anyway, come back tomorrow, please. And what we're going to do is we're going to go look within the healthcare sector for stocks that look like they could be really good reversal targets. Here are the biggest ones. I mean, I think some of these biotech stocks are probably a little bit overbought on this whole, the fat drug thing, which, by the way, I wish I could use or should use. I guess I just got to go to my doctor. All right, everybody. Thanks so much. I hope to see you tomorrow morning. We're going to be here at 8. Please recommend us. Please like us. Please subscribe. Please sign up for the notifications. And hopefully I'll see you all tomorrow. There's going to be some real money to be made here in the healthcare sector, I think, over the next days or weeks or so. All right. Thanks, everybody.